the biggest liability is cash.
Yes.
Am I correct, Tom?
Absolutely.
And
It doesn't produce. It doesn't produce anything.
No,
by
they're
itself.
printing. They're printing it.
Yep.
They're printing it since 1971. They've been printing it. So what happens is when Kim and I make money, income comes in here, and we have cash, we've got to move it into debt.
Right.
We're converting cash into debt as fast as we can. But the key is Kenny's now is property management, and then investor management and market management. So that's why anybody saving cash today and living debt-free, it's good advice if you want to be poor.
Correct.
Now, but don't switch into real estate unless you're willing to understand what Kenny knows about real estate. So that's why his 3 books. Give us your 3 books again, Kenny.
The ABCs of real estate investing, the ABCs of property management, and then we have an advanced guide to real estate investing.
And that's what you need to understand, because when you say move your money into debt, if you don't know what you're doing and you're buying a property and you have no education, you have no experience, you don't know what you're doing, that debt's going to be bad debt.
And I remember your dad, Kim, her dad was hardcore stock guy. You know, he was hardcore buy, hold, and pray in the stock market. And that worked for him. But I told him we're buying real estate. He says, I refuse to fix toilets. Well, so
that was my plan. I was going to have Dad was going to be a business partner. My dad was going to be my business partner on this property. And I called him up. I said, what do you think about buying this little single family house? Well, I don't want to fix property, and I don't want tenants calling me at this time of day, and I don't want to fix leaky roofs. And I'm like, I don't think I want to do this. I said, I don't think you do either. Thank you very much.
So just remember, paper assets are for some people. Commodities, gold, silver, oil for some people. Businesses are for some people, and real estate is the best. Because right now, the problem with Kim and I, our income is going up. And if Kenny doesn't find us a property pretty soon, we're going to pay taxes. So Tom, would you explain that psychology? Because this is on the B and the I side.
And because Tom, when we talk about taxes, Tom always says, can you find another property? Can you find another property?
Can you get more debt?
Yeah.
The tax law is a series of incentives to do what the government wants done. And one of the things the government wants done is they want housing built, okay? And they want commercial property built. So what they do is they say, well, we'll give you a tax benefit so that you're willing to go and risk your money, put in the effort and the time to go get, and to borrow money as well, because the government, of course, wants you to borrow money because that increases the amount of cash in the economy. And so it's all good for the economy. So what happens is the benefit that they give is what's called the primary benefit, it's what's called depreciation. And depreciation is magic, okay? Because while your property is going up in value and you're increasing your rents, you're actually getting a deduction for more than what you paid, because you get a deduction not only for the amount of money you put in, but you get a deduction for the amount of money the bank put in. So the debt is important, from a return standpoint, but it's also important from a tax standpoint. So critical that you understand debt if you're going to get into real estate and get the tax savings that you guys talk about.
So let me show you a picture. Okay, so let's say Kim and I have $1 million coming in from our businesses. It's a liability to us because they're printing more money today. So I want to take this $1 million over here. I want to give it to Kenny. He's going to amp it up to 10 million. And exactly as you said, because the government wants you to borrow money because the dollar became debt in 1971 when Nixon took the dollar off the gold standard, they dropped the interest rates because they want you to borrow money. If they don't want you to borrow money, they'll raise interest rates. It's really that simple. So let's say it goes to 1 million here to 10 million here. What that does is reduce taxes here. Is that correct, Tom?
Right, because that $1 million is not just a liability because they're printing it, but it's a liability because there's $400,000 of taxes associated with that $1 million of income. And really, one of the best ways to get rid of that $400,000 tax liability is to take that money and convert it into real estate, because then the government gives you this big deduction for your money, for the bank's money, and it offsets that $1 million of taxable income. Your taxes go away.
So that's why, Kenny hears a panic in our voices all the time. Kenny, Have you found another property yet? Because if he doesn't find any property, Tom is going to make me pay taxes. Is that correct, Tom?
The IRS is going to make you pay. I'm going to file the taxes.
And just to be clear,
really clear here.
and also to be clear, this formula is not just a U.S. formula. This formula is worldwide, correct?
It is. The U.S. right now has the best tax laws in the world when it comes to real estate. There's no question. But every country allows depreciation on investment real estate.
Final words, Ken. We have about 1 minute. So what do you have to say? Because this is why we're always calling you. We have too much cash. You have got to provide this for us so we can go into debt here and we can reduce taxes. Does that fit your psychology, your belief system?
Oh, yeah. I mean, Tom always says it perfectly, in my opinion. He says, if you want to see what the IRS wants, just look at their codes. And what the IRS wants us to do is invest in housing, period. And that's why we get the benefits from it. So we invest that money, we get the debt from the bank, and we're beating inflation. And then with depreciation and other things, we're actually able to take that money out tax-free. So we're getting income. So we're investing our money. We're getting our income tax-free. And if it's a value-add deal, which you guys have been involved in a lot of with us, then you actually get your money back. And then we have, of course, what we call infinite return, which is you've now gotten your money back and you paid no tax, and that's a cash out refi. So you don't pay any tax on that, and you still get income. So you give me money, I give it back, and you pay tax legally, over that depreciation amount only.
So let me explain what he just said. So this $10 million property, it's throwing income here, cash flow. Let's say it goes up to 20 million. What Kenny's talking about is we borrow out a gain, and that comes to us tax-free, but that's now tax-free money. So we go from 10 million to 20 million due to inflation, or what you want to call it.
Well, I call that forced equity. So I buy a property at 10 million with the idea of bringing it to 20 before I buy
That's
it.
the value add, yes.
I already know how I'm going to do it. It's not just market driven. We're actually doing things to make it worth 20.
Yeah. So when Kenny pitches the deal to us, we already know we're going to put $1 million here. It's going to go to 10. It's going to go to 20. We're already getting income from the property. When the property goes to 20, we borrow out the 10 tax-free. Is that correct, Tom?
Well, that's right. And then you borrow out the 10, but then you reinvest that 10 into new property because you've got to constantly be investing in real estate. That's why I'm always after you guys. Look, you're making money. We need to constantly be reinvesting that money into real estate. And that's really how this system works. Now, real estate, let me say one last thing on the importance of real estate from a tax standpoint. It is one of the few places where you can actually reduce your taxes today and never pay taxes in the future. Now, you've got to have the right financial education, you've got to have the right tax advice, but you can literally eliminate your taxes from your business today and never pay tax on the income from the real estate in the future, even when you sell the real estate. I mean, it's unbelievable, the tax benefits in real estate.